Hello to everyone, and today is Monday, and this is a quick update for you guys on a Monday morning. I see some smaller time frame price action here, but first let us begin with this daily time frame here. So this low which we created on Feb 6th, that is 59.9k, was broken here, created a bullish SFP. We have slightly moved towards the upside, but eventually we move towards the downside as this ABC correction. And now what we are doing, if we check the bottom here, let's see, after this bullish SFP, we had another bottom here as a second bottom, and that was around $59.157. But right now what we are doing is we are above that previous low, which is 59.9k. So we will delete this low from here, from the chart. And now we will use the previous count, what we had here, as a impulsive corrective move towards the downside. And we were talking about this being an ABC, and we were expecting, let's say if this was a finished wave 4, then we were expecting 5-wave move down, because the 5th wave should have internal 5 waves, but we did not get that move. So what we have to do is assume this as a ABC, and then ABC correction to the downside. Then we are waiting for another impulsive move towards the upside with the 5-wave moves. So let us draw this ABC correction, and this would be called as a flat ABC correction towards this 4th leg. So once we have fixed this daily time frame structure, if you want to understand why I'm drawing this as a 5-wave corrective move, then you will have to go back and check the video which I have made last time. And I have explained very clearly that I've been talking about multiple times that this could be a multiple ABC structure here. Sorry, multiple 1-2-1-2 structure here. So we have 1, 2, 3, 4 1-2s here. Okay, same as I'm drawing here as a 1-2. This is also a 1-2, 1-2, 1-2. So we have multiple 1-2 structure here. Or if this is not a 1-2, 1-2 structure, this is only a 5-wave structure, and this we count as 1, 2. This could be that 3, 4, and if this move as a 5-wave move down, extended 5-wave, then we are still waiting for this 1, 2, 3, 4, 5, the 5-wave impulsive move to the downside to be completed. So what we see in the smaller time frame right now is that we haven't finished this 5-wave move to the downside. It looks like we are on to that development of this 4th wave here. So to finish that 4th wave, we will have to finish this flat correction. If this is a flat correction, then we need the higher targets over here. So we will get into 1 hourly time frame and check locally on a smaller time frame what is exactly happening in this chart. So let's talk about the bottom first here. We have this bottom over here. This was that bottom around 58k. And after this bottom, what we are doing at the moment, we are chopping around. If you can see that this was the bottom, and then we get higher here as a first wave. And this is that second wave. All are corrective here, okay, ABC, ABC. So if it's a leading diagonal, we will get these corrective waves up and down, and they are typically overlapping. And so if we count this as a wave 1, this is a wave 2, this is a wave 3, and this is a wave 4, then this is that wave 5. So you can ask me here that why this wave 5 is not taller than this candle here. So it doesn't have to be taller than this candle. Sometimes the wave 5 can be even more taller than this candle over here. So it can rip through this structure. Sometimes it can be truncated. Nonetheless, this is already a 5-wave structure over here. And then what we have is an A, B, C correction. So if you can pay attention here, when the price is, this was the bottom, right? So we are moving the price towards the upside here. This was the top. And what you can see on the volume down here, that we are diminishing this volume over here. This was the top. So this is the bottom. You can see the volume is pretty low. Yes, you can argue that this is a Saturday and Sunday price action over here. So the volume is pretty low. But do not forget that CME futures and the options trading right now is available for 24/7. So the trading will be happening even on Saturday and Sunday. So my point here, what I'm trying to say is when the volume is diminishing and when the price is moving higher, that means there is a bearish divergence in the price action. So that means eventually the price, when it goes up, it has to correct to the downside. So if you can pay attention here, when the price was correcting to the downside, we get a spike in the volume. So this was the moment where the top occurred, and then after that we get this price divergence once again. And this is bullish divergence here. Once we have that bottom placed in around this zone with the spike in volume, we are right now moving towards the upside. And if we want to count this structure using Elliott waves, then we will count this initial move up as a leading diagonal from here, this zone. So let's say if this is a 1, wave 2, wave 3. So this is that leading diagonal. Okay, I'm using the wrong tool here. So we will have to use it this way. And from this bottom, we will have to use it this way. So let's use the wave structure. This is 1, this is wave 2, wave 3, wave 4, and wave 5. So the wave 5 is truncated here. And now we are going to use this corrective structure as a B, C wave. Okay. So now we have this initial move up as a leading diagonal, and then after that we got this corrective move, which is an ABC. That makes us look at this as a 1-2 structure for a larger time frame. So that one finishes here, and we have within that one wave, we have 5 waves up and down. So this is according to the Elliott wave theory, and the second wave is corrective wave, and we got that second move down. So this second move is not taking out this bottom of this first wave. So now that we have got that 1-2 structure put in, we can move towards the higher prices. And for the higher prices, we will have to use this fib tool. I will delete these structures because I have already explained how this can be calculated or how this can be counted. So we will use this fib structure, fib extension tool from this bottom here. And this was that 1, 2, 3, 4, 5. The 5 wave finished over here, and this ABC finished over here. So we will drag this down to this B wave, sorry, the second wave, and then we will find out the target, what we are expecting from this wave up. So the box comes around this area here. Okay, this is that target zone. And why I'm putting this as a target, because you can see here, this is 1272 zone, which is around 61,900, around 62K zone. And we have this 1.618 around 62.8K. So this is our next target. But is it this final target? No, this is not the final target. If we are getting this as a leading diagonal followed by a ABC correction, then we are expecting the third wave to move higher, then followed by a fourth wave correction, and then fifth wave final. In a impulsive wave towards the upside, it is 5 waves move up and 3 waves correction. What I'm talking about is these 5 waves here from this bottom. This is the first wave up, and then the second wave, and the third wave I'm expecting within this box. Sometimes this third wave can spike up slightly higher to initially, if there are some short orders over here, to scare them or to take their stop losses out, stop them out from this short order, and then move slowly towards the downside. And then finally we will have that fifth wave. So once we have marked out those levels, we can delete these channels over here and then check if the price is going higher to this level over here. We will use the fib levels tool and check where the price can come back and retrace. So we will have to use from this bottom here to this top. Okay, and we will use this fourth wave retrace tool, and from here, if you can see, the minimum retrace what we can have on this fourth wave is 0.236. Why I'm more leaning towards 0.236? Because this correction here was very deep. Okay, the second wave corrective move structure was deep enough, so the third wave is impulsive and the fourth wave could be shallow, where we do not get much of a correction to the downside. Okay, there is a possibility where this can come down to 0.382 or even 0.5, but this cannot move beyond 0.5 because that would be invalidating this wave 1 move. We cannot overlap into wave 1 territory. So I'm expecting, okay, let's say minimum, we can expect this one to come back and touch 0.382 level, and then we are expecting another move towards the higher prices. So once that is done, we can check the fifth wave extension could go up to what level. So we will use second bottom to the third top and then the fourth bottom over here. Mind you, this is the fourth bottom is just an assumption for now. This we will have to check as the price develops, as the price hits first this level, and then after that we get this correction. Maybe we will get correction only until 0.236, or maybe we will get to 0.5. So we will have to see this reaction. I mean, you cannot just simply go when the price comes here, just put a limit order and just go long. No, this is not how it works. You have to see the reaction when the price comes down here. Does it produce a wick immediately? Does it get brought up? If does brought up, then you can get in next candle where you can see the price is strong, and then you ride the wave towards the upside and you put the stop loss below that last low. Let's just say here that the price comes back and touches this .382 zone. Okay, so we will have this extension tool and we will see the next target level is around that 65.1k. So this is that target. Definitely the price can come, this is the minimum target for me, and the price can rip through this target because we have that let's say if we get the third wave not so impulsive, then we can get that extended move on the fifth wave. Okay, let's say if we get this extended move on the third wave, if we get a move not up to 1.618, but if we get 2.618, that is more higher, then this fifth wave could be slightly truncated, or maybe even just coming back and clearing the liquidity of top of the third leg and then moving towards the downside. So now that we have this fifth wave target, we can definitely come up here, sweep this liquidity. Okay, this is 1.618 if we get an extended move, but I'm gonna keep this as a 1-to-1 or even 0.786 zone. And what other tool we can use to find out this target? Do we get this ABC flat as an extended flat over here? Extended means this was the bottom, we have initial A move, and then the B move was extended because we have taken this liquidity. Okay, we have cleared this bottom and we have a new bottom over here. So this is definitely an extended flat. Or there is another probability for this flat is a running flat. Running flat could be from this top here, we got this extended move down, but the next move could be only up to this move here. Okay, up to this wave, and then from that place we are going towards the downside. Okay, so this we will have to watch out as the price develops, and for now we can use another fib retracement tool, that is from this top over here to the downside. So if we use this tool and we are using this long and short zone, and that confluence exactly lining towards that .786 zone. Again, I'm going to talk about this fib retracement, extension tool. That is, if we use this .236 or .382 zone as a potential fourth wave retracement, then the target is slightly higher. If this comes back and down to this .5 zone, then you can see the target also changes, right? You see, the target comes back down now around 64.6k. So once we are using this tool, you have to adjust as the price moves and finds a bottom. Then you have to use this tool here and use that fourth bottom and then look for the target for higher prices. So now we have this confluence over here. This is that long and short ratio, and we are also having that .786 zone over here also lining up with inside this box here. So we have this two confluence at the moment. So the third confluence, what we can do is we can use this volume profile here. And what the volume profile says, the volume profile, if you can see guys, this is also lining up similar to that box which I have placed in here. I'm going to delete this box and I'm going to show you why the confluence is matching around this zone here, because this is value area high of this entire this sideways chop move. This is the high of that value area, and this is that point of control. So let's talk about if we get this wave up here, we come back down and come up here, we do not go higher than this, we just can come up here and test this POC because the POC is lining up here. So we can just test here and then move from here to the downside. Okay, but if we find the strength, then we have this confluence here. This confluence is stacked up over here, and you can see this is a value area high, and we have that .786 zone. So around this zone guys, this is a very strong area for us to find a short order. Again, short order is not placing limit order guys. This you have to see the reaction from the price action and then you get into the long or short order. Okay, why I'm saying that? Because we can rip through this area and come and test this 1.618 zone, clear this liquidity here. Can you see the volume here? This is volume, very low volume over here. The highest volume is traded over this zone. So this would not be difficult for the price to move up higher and rip through this zone towards the higher side. And also you can see that this area over here, this also a quick drop, guys. As the price is dropping more quicker, the price also ripping through that zone more quicker, and then you can see there is a consolidation here. This could consolidate over here as well. So you have to pay attention here. Once we get that rejection, only then you look for shorts, not before that. So in this chart right now, the strong zone for me to look for short is around this zone. This is that first zone, and the best zone to look for shorts is around this zone here. I'm going to drag this slightly more higher because the price can come up to this 1618 zone and then reject. And also at the same time, there is liquidity over here because the traders who, let's say you do not see this price action, okay? This price action you do not see. We are here at the moment. So what do you see in the chart? This is a blank side and this is the chart price action. So when the price is moving down here, traders who want to go short because they see the weakness in this chart, they go short here. Okay, they can go short here. But where is the stop loss? They will eventually put their stop loss over here or slightly above here. Okay, so once they have the stop loss placed in, what the price action does here is it moves higher. So this is again inviting those long traders to long this market because we have found the bottom and then we are moving higher. Mind you, we cannot see this part here, okay? I'm just saying hypothetically, we do not see this part. So once we are here, we are thinking, oh, this price is going higher. So let's go long. And we put our stop loss around this zone here. So what does the price do? Comes back and sweeps this liquidity. Again, it does a move slightly higher, again inviting those traders to get long. So if you go long here, then your stop loss is here, right? So again, it moves down, clears this liquidity. There are also some long traders who went long here. They put their stop loss here. So it comes down, finally clears this liquidity, and we are getting here a bullish SFP. So once we got this bullish SFP, we are just chopping around. So there are lots of stop losses here. So once you are here, might be there are some traders who are going short here. They might have their stop loss here or here or here. Or if you have like 5x short or 3x short, maybe you keep your stop loss over here. So this zone here right now is becoming liquidity for the market makers to go higher and to hunt all this liquidity and then reverse the price towards the downside. So this is how the market works, guys. So you have to now check first if the price moving higher, does it have strength? Does it have volume behind that move up? Now we got that volume here, but if we are breaking through this level, I want to see here more higher volume. But also you can see here, we can reject from this zone as well. It does not matter for the market to play this ABC correction exactly. As I said in my previous video, this could be another ABC here from this bottom, ABC. And this is already could be finished as a fourth wave. And the fourth wave I'm mentioning is this fourth wave. One second, this fourth wave here finished and we are moving towards the downside. This could be just a 1-2-1-2 correction again. Okay, 1-2-1-2 structure, and then we are moving down. Why I'm mentioning this at the moment? Because if you can see this volume profile, as I mentioned, this could be that value area high, this could be that POC, but it does not matter. Price does not have any kind of requirement that it has to come up here and then only reject. Price can reject from this zone as well, because if you can see this yellow line here, this is that value area low, and price is trying to break this one multiple times, you can see, but it's not getting success in breaking this price. So we definitely can reject at this zone as well. So you have to, if you are long from this zone or if you are long from this zone, you have to use your stop loss, because if the price comes down, you get stopped out, but you do not lose your capital. So that's it, guys. I hope you enjoyed this video, and if you find some knowledge in this video and if you like this content, like and subscribe to the channel, and I will see you in the next video with next update. Ciao.